Hey traders, this is Christian from Market Trade Group, and this is your end of market video for Tuesday, November 30th. So we're done with November. Very rocky close to the month, and we got one more month of the year to go. Geez, what a year! What this day kind of. I don't know. Was seemed like a little bit symbolic of what we've been dealing with overall this year. Highs to lows. In terms of sentiment, we started off this year very strong, and then there was really kind of change in tone that happened, around February to March, where a lot of names really, gave back a decent amount of those gains. And the market got ahead of. Where are we? Here we are. The market got. You look at the S&P and it wasn't that bad. But if you look at stocks like, of course, I know I hate to use ARC here, but it's just a little bit more of an easier visualization. But this is what happens to some growth stocks. Maybe we'll look at the FFTY, the IBD. Which is, I think, a little bit better to look at here. But, same type of move, but not as not the same magnitude, right? So we've seen a lot of these moves throughout this year where just when you think you're kind of getting comfortable with this market, it will give you a curveball. So that's basically kind of. I'm not going to say too much in this video and not going to keep it too long. If you listened to my video yesterday, I talked about how that was a great balance. A great bounce to sell. I didn't like the as we kind of came away from yesterday. I didn't like the market mechanics at all. The breadth was not good. So besides, obviously today we got a lot of headlines, right? We got a lot of false moves. We heard, market seemed to get hit with a double dose of negatives, right? We heard first from the Moderna CEO about that another vaccine may need to be developed and that the existing vaccine may not help too much, and then Powell kind of changed his tone, and the market really kind of slid on that. But I think, I go back to price. And, I know that a lot of people just, seem to be very angry at Powell and frustrated. And, I'm in that camp too. I tried some day trading today too. And, I got caught in a couple of those trades that started to go pretty decently. In fact, I hit a target in, I think, in each one of those trades that I put on in the beginning of the day, but then just got out very quickly once I saw the market start to move. But I was not surprised at the way that the market was moving, because we've kind of seen this deterioration and a lot of warning signals. So that's really, I think, the takeaway. And if you're newer to trading, and if you're following a lot of these headlines, I would say, better than following the headlines, because you just can't, if you've got a decent amount of positions on and risk on, you just can't react that fast to these headlines. This market is just too fast. What we try to do, and I try to help traders with here at Tribeca Trade Group, as well as I post a lot of what I do. I post on Twitter a lot of things too, a lot of tidbits. But we've gotten warning signals for the last 2 weeks, right? And it's changed quickly. There's no doubt it's changed. It's changed pretty dramatically and quickly. But this is the advanced decline line for the Nasdaq, right? And again, I'm sorry to repeat myself, but when you've got more declining names than advancing names, and the market is still going up, that is a divergence, and it's a warning signal. It just is what it is, right? That's the I talked about how picking 10 names out of a stock in last night's video, but it's very similar to just thinking about things in terms of the wind is at your back, when you're investing, versus the wind is in your face when you've got more declining, areas of the market. And we just can't, like, I know some people really like to try to time this stuff, right? It seems like Twitter is all about trying to time these turns. I tell you, trying to time the turns is not a game that is very easy to play. You could get lucky, and things can work for you, especially in a bull market, which we are still in a bull market. But it's very difficult to try to time the turns. The other thing too is, maybe this changes sentiment too, because the complacency has been so high in this market. Just thinking, like, even when I posted this, I actually, and I don't think they were sarcastic comments, but people were saying, "Oh, this is bullish." Somebody responded to me yesterday, and they were like, "Oh, well, yeah, that's this is really good for the long term." I'm like, what? So I don't, I think that there needs to be, and perhaps that's what the Fed is doing too, is, interjecting some reality into this market. I mean, a lot of stocks have had, and this is what we talked about too in the end of day video for members on Friday. If you look at the percentages of where we are for the year, up 20% for the S&P, up 25%, even after this last week, is still a very, very strong year when you look at it. So, thinking that the market is just going to continue to charge higher no matter what, under any circumstances, I just, I think it's a bit better to be cautious in this environment after the run that we've had, and the breakdown in market breadth. And to me, it's just been a very big warning signal. The fact that this took out the lows of August. So now that you hear that I've been cautious, some people like to say, "Oh, well, he's cautious now. The market's going to go." You could try to use that as a contrarian signal, I guess. But listen, I just try to read what the market is telling me, right? And I try to be objective in what I'm doing, and try not to take too much more into opinions and read that much more into it. Keeping an eye on price. A couple things like the VIX, which we talked about in yesterday's video, but and I apologize, I was using the weekly chart when I was looking at this, and I was saying that it was an inside day. It's been an inside week so far, but so just to kind of, I don't want to say to conclude yet to the video, but the video is about 7 minutes long, but this is another cause for concern. The VIX over 20, 22, right? Number one, that means that the market is moving faster, and that the market is implying a lot more volatility than it did a week ago, right? And that's a place for me just to be very conservative and just wait out the storm a bit and just wait for better environments, rather than trying to kind of start adding new swing trades just to say I bought the dip. So that's my feeling in terms of my trading account. I haven't really made too many changes in the TTG trend portfolio. I will need to basically making some decisions if we continue to see some weakness and a breaking of like the 50-day moving average, which is kind of my clue to kind of put on a hedge, right? Which means I'm going to give up some, once from that move down to the 50-day moving average. But hey, another thing that I said earlier in the month is, we didn't come in and cross the top of value, which it was 19 straight months where we actually, went back in and touched the top of value, or broke through it. But, very odd that we didn't see it this month. So I don't know what to really make of that yet. But we haven't done that for 19 months. So I'll have to do a little bit of research to see if I can figure out in the past if that's been done before. But yeah, if you look at this breadth, and I've got this up here again just to show you the numbers. The other thing that so some people think that this is good too, right? I hear this term, and this, it's not a term, it's actually what the market participation, and I hear 90% down day, and some people are thinking that, oh, that's an oversold level that I could try to trade off of. Well, the other thing that would strike me as odd, because I've never, I'm always trying to learn different things. But I heard that we examined that last week. Right, where did I put Saturday? I think I put this in here. Saturday. Where is this? Oh yes, here it is. So I talked about, I put together these thoughts for members on Saturday morning, and I heard about the last 90% down day, right, was on 1026. Well, look what the market did on 1026. Right, this wasn't such a good thing. 90% down day. Look what the market did afterwards. It fell apart to the downside. Now, again, we had to kind of get that out of our system, and we did, make a bottom here, and then we charged higher after that. But for the next week, there was a lot of lower prices, right, before the market turned around. Now, and again, we did turn around and it was successful, but so I think we had or either close to it or another 90% down day again today. But I don't, other than looking for an oversold bounce, which is what we got on Monday. You have to really come up with some strategy based on that. And if that's your play, that you're playing for a bounce, just as we were talking about yesterday, and why I got rid of some trades, even trades that weren't up that much yesterday. I peeled off some risk yesterday, and because I thought that we could have that oversold bounce, but look at what has ensued, and and that's one other point to make here. When you have a move down like this, you often don't just see a move right back up. That's very infrequent, I would say. So, we've lost the 20-day moving average here, and I think looking at the volume, there was also an MSCI rebalance that happened today. But I think that I'm not making any predictions, but I think this December is going to be a very interesting month. We've got a lot of events. You've got a Fed meeting. You've also got, speaking of rebalances, you're going to have an S&P and NASDAQ quarterly rebalance for December. And, if you think that there was volatility around today's, right, there was this big sell imbalance, like $8 billion today. Right? We'll have to see how that's going to shape up once we get closer to that third week in December. But it's going to be a lot of volume again, just like we got with September's, the last quarterly S&P and NASDAQ rebalance. Right? So, so I think it's going to be an interesting month for December. And I'm going in, like, I didn't do any major buying the dip. Today I'm more, being a risk manager, and just getting out of positions once they hit their stops. One position that I kept on, I could talk a little bit about this month and P&L, but the one position that I kind of fell in love with too much, and it was a position that really I made a lot of money this year in, which was INMD. I kept this thing on by far one of the first times this year that I've had a really nasty loss. And I was in February options. So this position, like, I think I'm definitely still up for the year in this position, this INMD. But I kept on February calls. And I probably should have, in hindsight, probably once we started to break inside value, should have gave this position up. But now these calls in February will most likely expire worthless. But so I don't often do that. Falling in love with a position, and this is where it could really kind of get you into trouble. And that's by far, I think, the biggest monthly loss for me. Again, I like to share these things, and hopefully traders can kind of learn from them. And I think over and over, like, one of the lessons to learn, I think, for newer traders is do not fall in love with a position. Do not fall in love with a company. I've talked about this before where, hey, if you really like a company, like I use the Amazon example, even though I do think Amazon is a great company, but that doesn't mean that that you can't love using the company as a customer. Doesn't mean that that you need to fall in love with the stock, right? Two different things. You could still love the company, but if the stock is telling you that it's breaking down, honor the price action and what's going on in the trend. right? Because even here, which was the break of the 50-day moving average, could have been kind of salvaged a little bit. But anyway, I will do a video for members with full P&L for the month, because I did have a positive month. Again, I look at the ones that didn't work out, because those are the ones where you can really improve the most. Being a risk manager first, trader second. But yeah, it was a good month. It wasn't as great of a month as it probably was, from where we were now, from where a week ago. But still, positive month. And my P&L now for the year should be up about 74% for the year. So up 74%. So that's an increase from being up about 68% at the end of October. But again, I would have liked to be up a little bit more than that. But again, you kind of have to take these things with a bit of a grain of salt. I'm an active trader. I'm here every day, even though I had an appointment today midday. But I'm in front of the screens all the time, right? So sometimes that's a detriment. Right? Sometimes it's a good thing because you're catching things. Sometimes it's a detriment being in front of the screens when you know that you shouldn't. But this is what the market did for the month. S&P was ended up down for the month, down a little bit less than 1%. Qs finished up 2% for the month, so that did squeak out a gain, right? And they did show some relative strength throughout the month. And then IWM finished down 4.3% for the month. Okay, so underperformance there. So I've been staring at this S&P chart, but we could go through and just look at where the Qs are. Qs are still holding the 20-day moving average. I don't really like the look of this too much, so we may need some more time for this to kind of straighten out. And then, of course, IWM, which actually came back there at the end of the day. But to me, this is, as I had said in yesterday's video, I'll be watching this area. I won't be participating much in it. It's too sideways. I'm a trend trader, so I stick to trends. Sideways is one of those trends that I don't really want to participate in that much. And trying to pick the bottom, not for me. The bright spot for the day, we'll kind of end the video on a bright spot, was Apple. We heard about increased demand, I think, in China. I don't know if there was also demand in this MSCI rebalance today, but that's a hell of a candle for the day, and on heavy volume. So will this be the new leader of the market? Right? It's not a super kind of fits into maybe what this market is looking for. Not a real expensive high multiple stock, but does have growth, right? Nobody's going to be getting rid of their iPhone anytime soon. So that's Apple. A couple other stocks that looked interesting to me, which I took a little position at the end of the day, just because, hey, it's a good signal. This GLBE closed above value, and I think it could get up to about 68, 69, right? There's a VPOC up here at 69, and then on the 1 hour, I think there's a VPOC at 71. All right, so that's it. We'll kind of we'll keep the video a little bit shorter than, we'll kind of keep it under the 20-minute mark. But again, remember that the market. Oh, look at that! We did take out that second VPOC that we were noticing earlier in the week that we came very close to and didn't take out. But there it is. There's another one that's being taken out, and there's another one that lives lower. But my final thought going into the new month, right, for December, is take what this market is going to give you, not what you want it to do, right? We all want to make money, right? That's the goal of what we're doing on a day-to-day basis, right? But sometimes the environment is just not the best. To me, when the VIX is over, way above 20 like it is now, that's a much harder environment. So be patient. Let this market come to you. Try not to force trades. Respect the risk, as there's more risk in this market with the VIX at as high as I just mentioned, and go from there. Adjust your position size. You don't need the same position size that you need when that you may be dealing with when the VIX is around a 15 or 16, right? And and options are going to be a lot more expensive, right? With higher implied volatility. Risk disclaimers in front of you. Everything that we talked about in this video is for information purposes only. Thanks for watching. Have a great night, everybody.